Let's pick up on the markets now. The local bourse will be contending with choppy global markets at the back of mixed Asian markets. The rand may hold on its gains at a 5-week high. The relative strength of the rand is mostly tied to a weaker dollar after the U.S. created few jobs than expected in August. For a sense of how the markets are shaping up now, let's speak to Andile Buthelezi. He is with Sentio Capital. Mr. Buthelezi, thank you very much for your time. Give us a sense of how the markets are doing in early trade, and keep in mind that this is ahead of the 2021 second quarter GDP data that we are anticipating today. Will this data have any bearing on how the rand performs today?
Good morning to you, Tony. Look, we've actually opened quite positively this morning. The OSHA up about 0.4%. A lot of the stocks that came under pressure in yesterday's session, such as Steinhoff, Northern, Amplats, and Bala, all seeming to recover some of those losses from yesterday. In terms of what you mentioned about GDP, is it likely to impact the rand? I think it would if the number came in significantly below expectations. As you mentioned there, the rand has been strengthening quite a bit over the last few trading sessions. A large part of the reason being the fact that that U.S. jobs number that came through on Friday was materially below expectations. So that has seen a little bit of dollar weakness, just because the conclusion that market participants come to when they see the weaker than expected jobs number is that the Fed could begin to taper significantly slower than what they had initially anticipated, and then interest rate hikes, of course, could be moved out even further than initially anticipated. So the rand has definitely been strengthening, and if that number that we see later this afternoon comes in much lower than what is expected, then you could begin to see a little bit of rand on the back of that.
Sure. Let's actually drill deeper into this anticipated second quarter GDP figures. And in the main, the economists are saying that they are expecting a growth rate to slow to about 2% in the second quarter. How do you see the numbers panning out?
Yeah, that's correct. Q1 was quite strong at around 4.6, so you see that number just slowing slightly to about 2%. I myself don't forecast GDP numbers, but I think that 2% number does sound sensible. Like I said, if it comes in below that, then you could start to see some rand weakness. The full-year numbers is anticipated to come in between about for the 2021, that is, it's anticipated to come in at around between 4.2 to around 5%. The year-on-year number for this period, for this Q2 number, is anticipated to come in at around 18%. So, I mean, it will be interesting to see what the actual figures look like. We did see in the Q1 number how much the mining sector contributed to just that growth in GDP that we saw. We have started to see a little bit of a weakness in commodity prices over the last few weeks. So let's hope that the mining sector as a whole can continue to lift us up in terms of that GDP number.
Yeah. Let's quickly move to company news, Mr. Buthelezi. And let's talk about Shoprite Holdings releasing its results for the 53 weeks to the 4th of July 2021. Talk us through their numbers briefly.
Looks good, actually. I mean, if you look at the supermarket sales in South Africa, those are up about 9%. And this is in a period where the liquor stores were closed for around 144 days. And you know just how important liquor sales are for retail companies such as Shoprite. So despite the fact that their stores were closed for such an extended period of time, they managed to eke out 9.3% worth of revenue sales in that RSA business. It was a busy period for them in terms of corporate activity. They've exited the Nigerian operations, they've exited the Kenyan operations, they've put up I think the Madagascan as well as the Ugandan operations, they've listed that as discontinued. So overall, very much reducing the size of their footprint in that rest of Africa region. It's a tough region to operate in. You get liquidity problems, you deal with regulation problems, etc. So they've definitely taken a conscious decision to reduce the size of their footprint in that region. I guess the one other thing worth mentioning in this result is just how the initiative that they started called Shoprite X is proving to be quite successful, and how the two products that have come in under that initiative, called the Extra Savings Rewards Program, as well as the Check the 6060 app, have proven to be quite popular with consumers. I think if you look at that 6060 app in particular, it's proven to be quite convenient and easy to use, and that has seen it rise in terms of popularity.
Yeah,
I think they've seen around 1.5 million downloads of that app. And to be honest, I wouldn't be surprised if we continue to see that number rise even further. So in terms of prospects for Shoprite, I think the continued rise in the popularity of that 6060 app, combined with a more normal liquor trading environment, should see them do well should see them continue to do well, at least over the next few months, in terms of an earnings perspective.
Sure, yeah, and I couldn't agree with you more there. Checkers taking full advantage of the 4IR. Let's lastly talk about Imperial Logistics, also releasing audited results for the 12 months ended the 30th of June. How did they perform in the period under review?
Yeah, also quite a good number. A large part of it is because of a strong recovery in volumes relative to the FY 2020 year. So that has seen the headline earnings per share number rising in excess of 200%. So quite a decent number for them. They managed to reduce their net debt levels quite nicely as well. They've managed to conclude the sale of some of the shipping businesses and getting around 5 billion rand in exchange for the disposal of those businesses. No final dividend declared, but they did declare an interim dividend earlier in the year. And I think a large part of the reason they're not declaring now is because they are still in talks with this company called DP World, which is a company based in Dubai that is looking to buy Imperial. So that offer to buy Imperial still has to gain shareholder approval. So I think it's still very much at that stage, and because of that, they're choosing not to pay out a final divvy for now. But I think on the whole, very much a positive result for Imperial. Largely because of that strong recovery in volumes for them after a very disruptive 2020, of course.
Andile Buthelezi, equity analyst at Sentio Capital, thank you very much for your time.